Those days, they just keep flying right by this week. Welcome back, guys and gals. About that time of day again. Time to get back to work. Thursday evening, January the 9th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me. I help traders find high-quality setups using a very simple three-step strategy that we teach and trade together every morning in our trade room. But my job is a little bit different tonight. Tonight, my job is to help you find the best levels of support and resistance, the best entries and exit setups for tomorrow, and most importantly, my job tonight is to keep you out of trouble by helping you find some of the best traps to avoid on tomorrow. That's Friday, not just your ordinary Friday, non-farm Fridays, right, trading session. And we have a lot to cover in tonight's video. We're going to start off tonight looking at the calendar. Got a bunch of news tomorrow morning I want you to be aware of, but of course, a bunch of known unknowns we're watching closely as we go into the end of this week and then into a big week coming next week. So we'll grab the calendar. We'll talk about what to look for, what to avoid in tomorrow's trading session. Then we'll grab some charts. I got them all loaded up here in the background for us. Got some oil, some S&P, some Nasdaq, and we'll wrap tonight on the mighty yellow, right? That yellow metal, those gold futures. Now, don't forget, guys, if you're here for the first time, make sure you subscribe to the YouTube channel so you never miss a video. And if you have any topics you want me to cover in my next video or any questions tonight about the content of this video, drop the questions or any topics you want me to cover next time in the comments section below. But in the meantime, though, let's get this party going here tonight by starting off with the economic calendar for tomorrow. What's the best time? What's the worst times? Let's grab a look at the schedule courtesy of Econo Day. Tomorrow, of course, is the real first Friday of the month. I realized there was a Friday last week, but of course, first Friday of the new year here, right? Kind of the official first Friday of the year. And of course, tomorrow, we've got the employment number coming out at 8:30 Eastern Time. This is the big news of the week, really, this week. Well, obviously, there's been some other bigger news events that have come out, but this is the biggest scheduled news report that we have on the calendar for tomorrow. And really, the most important thing that I want you to remember about tomorrow morning is be very careful in the overnight session tonight. You want to be very careful on markets like gold and currencies. Overnight session tends to be relatively choppy, quiet, low volume ahead of that news report tomorrow morning. Hopefully I'm wrong. Maybe we'll see some good price action overnight, but usually, as I mentioned in last night's video newsletter, usually the lead up to that monthly non-farm payroll report, also known as the employment situation, usually the evening before that is relatively quiet. So we're expecting to see some sloppy, choppy markets overnight. Hopefully I'm wrong. Hopefully we get some great price action for you folks in Asia and Europe. But don't be surprised if things are a little bit quiet here because this is a pretty big news event coming tomorrow. I also want to remind you too that when that news comes out at 8:30 Eastern Time tomorrow morning, a lot of times the market does really one of two things. Sometimes the reaction is really violent and sometimes the reaction is really quiet. And what I find, the best advice I can give you and what I tell myself after 8:30 is give it some time tomorrow morning. This is not your typical news report, right? Remember, we heard a very bullish number out of the ADP report right earlier on this week that blew right through expectations. So we're expecting to see a relatively good number tomorrow. The reason why that's important is because whenever we have kind of a tip-off, if you will, of what the news will be, most of these markets have already priced in a pretty bullish number tomorrow morning. So if the number comes out within expectations tomorrow, you can definitely expect the markets to be kind of quiet. Sometimes, right, the markets have already priced in this news, and when the number comes out, we're not going to get much of a reaction. So don't force it if the market's quiet around that news report tomorrow. Now, the real craziness happens if the number comes out outside of expectations. Remember, we saw that ADP report, right, on Wednesday. So people have a good idea what's going to be coming on Friday morning at 8:30. If it comes out higher than expectations, lower than expectations, that's when traders have to go in and manipulate their positions. And that's where things get wild. So you got to give it a couple minutes, right? Probably 10, maybe even 15 minutes sometimes after that employment number comes out tomorrow morning. So a quick recap here. Overnight session is usually rather quiet, rather slow. So be careful. Don't force anything overnight. The markets that are most affected by this are going to be gold and currencies. Gold is notorious for being really choppy ahead of the employment number and after the employment number. Now, that's not going to stop us from trading it, but we have to be realistic. We're going into a big news report tomorrow. So we'll trade our patterns, but we're not going to get too aggressive on that yellow metal tomorrow ahead of it or afterwards. Stick to the plan. Don't get too aggressive with it with those specific types of markets. And then again, once that news comes out at 8:30, remember, if it comes out in expectations, it'll probably be a little bit sluggish, so give it some time to kind of get its mojo going after 8:40, 8:45 into that 9 o'clock top of the hour. But wait a second though, if the number comes out outside of expectations, a lot of times we get a very violent response, right, to all of our favorite markets. And the same thing, we've got to give it 10 or 15 minutes, let the dust settle, then we'll go out and look for those reliable setups together in our trade room. Tomorrow morning, major news at 8:30 Eastern Time. Get there early, and obviously we'll have a front row seat tomorrow at 8 o'clock Eastern Time in our trade room. Now, what about after the news? Well, remember, it's a Friday morning, so you got to have a really good reason to be trading tomorrow after 11 a.m. Eastern Time, right? So 11 a.m. Eastern Time is pretty much my cutoff on a Friday morning. Honestly, some Fridays, after 10:45 a.m., it gets pretty slow and sloppy. So I would say definitely use your best judgment if you're trading on your own. But obviously tomorrow, if you're with me in the trade room, we'll have our finger on the pulse, because we know that the window of opportunity on a Friday morning is always relatively small, 8 o'clock to about 11 o'clock, maybe as early as 10:45 a.m. Eastern Time. So again, get to it early tomorrow. Get out of there early because it's a Friday after all. But again, let that employment number come out and be careful overnight. Now, that's the news we know about tomorrow. As I've talked about all week this week, next week here, we've got that phase one trade deal, right? Rumor has it that things are going pretty well to the U.S. and Chinese negotiators. It's kind of taken a back seat this week to the next piece of, right, which is, of course, the tensions in the Middle East right now. So we know that is going to be something on our radar for tomorrow. Kind of the tit for tat back and forth right now. It appears things have settled down and de-escalated, as they say, right, in the news media. But I would imagine, though, these are the two, what I call known unknowns, people will be watching for tomorrow. Will we hear any updates overnight from China regarding next week's phase one trade deal signing? Will we hear anything overnight right out of the Middle East regarding any further retaliation? Things continue to develop this week, and I'll be keeping a close eye on that for all of our clients tomorrow morning in the trade room. And again, tomorrow, oftentimes a very busy day on a non-farm Friday. But that doesn't mean, though, that you have to do it on your own. Come out and join us every morning in our trade room, and we'll trade that strategy together right around that news report, finishing up right before 11 o'clock on Friday morning. So now you know what we know about tomorrow. You know the known unknowns. Get to it early, get out of there early, enjoy your weekend, and we'll come back and do it again next week as well. We got that out of the way now. Now let's grab some charts. Looking at some charts tonight, I got some crude, some S&P, Nasdaq, and of course, how can we forget, right, those gold futures in the lower right-hand corner. Let's jump in first on oil here tonight. Over on the oil, what do we know about oil? First of all, we know the bears had control for most of the beginning of the session, but as of 11 o'clock, we saw a 1, 2, 3 reversal, and now the buyers, it may be fragile, but the buyers definitely have control of this market. So we know what a bull trend tells us, right? Bullish momentum says, I want to buy pullbacks. I want to buy at support levels. Now, what else do we know? We also know the day began, right, with a bit of a range, right? In the faster time frame, it wasn't much of a range. In the bigger picture, though, you can definitely see that big, juicy trading range. What does a range tell me? And again, we expected this range, didn't we? We talked about this last night on the newsletter with those runaway markets we talked about last night, right? A lot of ranges in today's trading session. What does a trading range tell me? Trading range acts like a magnet, right? So we know that there's kind of like a magnet right inside that range, right? What do we do with a range? We buy low, we sell high, and we avoid the middle, right? We call that no trade zone right in the middle. What else do we have here on this chart? $60 a barrel is right there, right? That looks like that might really be the actual magnet with a range, right? Kind of hovering around it. So we know the market is bullish in the short term, right? We also know we're underneath a range. I want to be a buyer, but there's a big elephant in the room right now. Do you see it? What do you think? Do you see the big, what's the elephant in the room right now, right? There's one really big clue on this. If you know what that clue is, hit the thumbs up button for me tonight on the YouTube video. That tells me you tune in every evening. What is it? What's the big elephant in the room? It's this big, strong move down. I know I kind of gave it away with that, right? With that arrow on the chart. But what do we know about a big, strong move? Anytime we see a strong move in one direction, we always know there's potential for another leg in the same direction. We got a couple examples of this to talk about tonight on this video, but this is a great example where we know we're short-term bullish, but look left and you can definitely see the sellers had that strong move down. And honestly, whenever I see a big move like that in one direction, I always know that at any point the bottom can come out, right? And this thing could collapse back down into that trading range. So that is definitely weighing on my mind right now. It's an important small detail. And again, if you saw that ahead of time, congratulations with you, right? Again, if you saw that big push down, if you had that on your radar, hit that thumbs up button for me. That tells me you're paying attention every evening on this video. Now, what's the plan now? Now that we know that big strong move down threatens to kind of spoil the fun for the buyers, I want to be a buyer down in this battle zone, right? I've got my trading range. The trading range defines my buy zones. The trading range defines my sell zones. I want to buy at a support level, but how do I buy as we pull back and still respect momentum of those bears? You know exactly what pattern I like to use, right? It's called a nested failure pattern. So imagine how we get the pullback you want. I want to be a buyer, but again, all that bearishness before tells me these sellers might hold this and run those buyers out of town here, right? So what I want to do is I want to let those sellers try once off the moving average, try twice off the moving average. I call this a nested failure pattern because basically it's a failure setup inside of a failure setup. Now, this does not need to be very big and very dramatic, but when we do get that pullback as we go, I'm going to look for that moving average coming over. I'm going to anticipate those sellers are going to try to run this back down to retest a low. I'm going to wait for them to try once, wait to try twice, and then I'm looking for, again, I call it a nested failure pattern to buy off of that low. Now, what if we keep going higher here? If we do go higher right now and we break above these highs, that will negate this big move down. And that will take away the threat of that second leg lower. So let's say, for example, we do go up into that range and we start to chop around going sideways ahead of this non-farm number tomorrow. At that point, now I'm not so worried about the big elephant in the room, so to speak, right? I'm not worried about that big move down because now we've taken out all of those sellers. Big clue if we can take out that prior high. Once we get those highs taken out, we go sideways inside the range. I'm looking to get, again, range-bound market says what? Buy low. What's my favorite pattern to buy underneath the range? It's called a two-try failure pattern underneath that trading range. It's a very similar pattern to that first pattern we talked about. One's a nested failure. Second one is just a straight failure pattern. So that's two patterns, two scenarios I'm watching for to be a buyer tomorrow. Now, there's one more thing I want to talk about. We had this big move down, right, the last couple days here. That always opens the door for a possible short covering rally. So at what point could I be buying as the market goes higher? This is going to be a bit of a sensitive issue here because we've got that trading range. I want to be a seller up here, right? Yeah, I want to sell up there. So what would be a couple options for reliable buy patterns as we go higher here? I've got really two scenarios. One of them is going to be a strong move up, a pullback to the moving average, hold the pullback, and a strong jump off the moving average. If I can get above the high of the range, got to be above the high of the range. If I can hold a pullback to the moving average and see some strength coming off the moving average, that's going to be a sign that the sellers who are still holding positions from yesterday's session are now going to be forced to get out. That's called a short covering rally. I'm going to mark up that high, find a hidden channel, and I'm looking to buy the low of that hidden channel. I call that a 1, 2, 3 breakout into a hidden channel pullback. Now, there's one more pattern I'm watching here, and that is a strong move up, a pullback, a higher high in price. It shouldn't be that much higher, right? A little trap high there, or a little slightly higher high. Once I get that higher high though, now I know sellers are trying to sell it. If I can see a strong enough move going higher here, now I can look for what I call my 2 try trap breakout pattern. Again, strong move up, higher highs in price. What you want is just a little higher high right there, just a little higher high. That's all you want. Then grab that trap as it comes back underneath. That's going to be another great buy setup as we try to rush right above the high of that trading range. But let's play the opposite game now. How do we sell this market? Well, we know we've already got, again, the big elephant in the room, right? If you saw it, definitely kudos to you. If we get that strong move down, right, sellers hold it now. At this point, if we go back down to retest those lows, I'm looking for a trading range down here. I would anticipate that you're probably going to see some sellers take their profit, but I'd be very doubtful if you see a bullish reaction to it. If we retest those lows, I'm looking for a sideways range. I don't want to just sell it as we go lower. I want to wait for the price to get above that range, wait for those buyers to try to buy the pullback, and I'll use my popular failure pattern to sell off of that high. So again, if we do make a run back down, right, and we hold that pullback, as I anticipate, we may see some sellers coming in full steam ahead, right, as we go lower. If they do make it back down to retest that low, at that point now, anticipate a trading range as bears take profit. Once I know I have a range, what does the range tell me to do? It tells me to buy low and sell high. I've got a bear bias to it at that point. I'm trying to sell above that range. My favorite pattern is going to be a 2-try failure pattern up above the high of that trading range. Now, don't get me wrong here too. If they can hold and go, if they can really show us some momentum going lower here, I'm not going to back away. I'll definitely look for a short, but I want to make sure I find my channel first. I'll draw off the low, I'll draw off the high, and we're selling off the high, right, of that hidden channel. So again, we've got that big bear move down earlier. If we do get that follow-up leg lower, do we A, end up going sideways down here, find the range, sell high with a 2-try failure pattern, or do we see this market run lower, hold the pullback, and jump to new lows? If we do see it jump to new lows, mark up those lower lows, find that hidden channel, and we're looking to sell the high of that hidden channel. Last but not least though here, what if we go higher here? What would be an easy way to sell above that trading range? The key is going to be getting up in that 60-43 area. We go up into the overhead resistance area. We're bullish at that point, but I want to be a seller going back into the range, right? The range is the magnet. I want to sell this back into the range, but how do I sell when I have the bulls in such firm control? I look for a crown reversal pattern. I wait for the pullback. The buyers try once. They fail to retest the high. I wait for a lower low followed by a trap high. And I look to sell back down into that trading range. I call this a crown reversal pattern. And of course, again, you'll notice this is very different than the 1, 2, 3 breakout pattern to qualify buying the pullback off the low of that channel. This is very different than a strong move up, pullback, higher high, 2-try breakout pattern. So make sure you realize these are 3 distinct patterns. This crown reversal pattern clearly shows strength for the bulls, but they stall out, right? They can't keep that strength going. That's your cue now that sellers are coming back in, right? And they're selling it back down into that trading range. So hopefully by now you've got a really good plan for tomorrow. I want to buy low, sell high, avoid the middle. A lot of what we're waiting on right now is going to be tomorrow morning's non-farm payroll report at 8:30 Eastern time. But again, we have some tensions in the Middle East right now. The U.S.-China trade talks. Anything that comes out overnight could shake this thing up. So of course, you want to make sure you join us tomorrow in our trade room. That way you know you're doing it the right way. Oh, in the meantime, too, if you're not going to be with me tomorrow in the trade room, the next best thing is to grab my free trading course in the upper right-hand corner. I provide a much deeper dive into all of these patterns. So if you want to learn more about my failures, my nested failures, my breakout patterns, my trap patterns, I would highly recommend grab that free trading course linked up in the right-hand corner. And all of the links that I mentioned tonight in the video will be included in the description of this YouTube video. So don't delay. If you're not with me tomorrow morning in the trade room to do it with me, make sure you grab that free course linked up in the description. There'll be a little information icon there in the upper right-hand corner. Next up here, oil is looking great. How about some S&P? Let's jump into the Emini here. What are the big clues? There are 4 big clues on the S&P right now. One is we have obviously bullish momentum. Market is bullish right now as it pushes up to new highs. What does a bull market tell me? It tells me buy pullbacks to support. Right? Find levels of support. What else do we have here? A trading range. What does a range tell me to do? A range tells me to buy low. A range tells me to sell high. Right? Favorite pattern for a range? Failure patterns. What else do we have here right now? Spike and channel. Now we talked about this, I think it was last night, wasn't it? Or night before that? What does a spike and channel tell us? Spike and channels tell us expect a deep pullback to where? The base of the channel. Spike and channels tell us look for a deep pullback to the base of that channel, right? There's the base of that channel. The base of that channel and the first pullback is usually where you're going to get that pullback to, right? So right about there, right? That's where you're expecting, right, a deep pullback here because of that spike and channel. The fourth clue is that support trend line. And that support trend line, if you watch this nightly newsletter every evening, you know anytime I have a trading range, I'm always looking for these expanding triangles, right? They make for excellent levels of support and resistance. Now, so again, we know we're bullish. We know we're going into a trading range. What does that tell me? Look to buy underneath the range. Now, where can I get long underneath the range? Well, I get a pretty good idea that trend line will be a good spot for us, right? The base of that spike and channel will be a good spot for us. So as you can see, this 3264 area is really looking pretty tasty for those buyers. I also want to remind you too that we're going to use these buy zones underneath and sell zones right up overhead. All right, let's play that game. What do the buyers want to do tomorrow? Right? What are the buyers doing? And you'll notice there's no big elephant in the room here, is there? No, right? There's no big strong move down here that we have to worry about. So now, if I can get underneath this trading range, now all I need is just to catch those sellers, right? Look at this pattern back here. See how we go underneath the range? We pull back to the moving average. The sellers try to sell off the moving average, and see how they fail? Now, this is not a great location for it, but we see these failure patterns all the time in range-bound markets. What you want to do is you want to get those patterns down in this green area down here. So again, I want to get underneath the range. That will bring the moving average over. Sellers in the market will definitely start assuming this market wants to go back down to retest the low. It's not a trend though. It's a range, and a range acts like a magnet. I'm going to wait for that price to pull back to the moving average, wait to get those sellers to commit right off the pullback. Once I see those bears enter the market, and you'll learn more about that in that free course that I mentioned earlier, now I know exactly where their stops are, and I can use those stop losses as fuel, basically, to buy right into those stop losses. Now, a word of caution. You'll notice I've got one buy zone and two buy zones. Okay, the depth of the pullback is a big part of this. If we go into the first buy zone, I'm pretty much looking for a typical failure. And if we have space for it, pullback combination. The reason why I say if we have space for the pullback, again, failure pattern into pullback combination, the reason why I say if we have space for it is sometimes those pullback patterns, they happen inside the range. You just don't want to be trading inside the range. Range-bound markets stay away from the middle. Buy low, sell high, and avoid that middle. But what if we really tank down here, right? What if we collapse and we get down to that secondary battle zone? Well, now I do still want to be a buyer here, but remember, at this point now, the bears, they're not going to give up as easily anymore, right? So now I want to let them try once, try twice. See, we talked about this on the oil, right? Same thing we talked about on oil. So if we get a strong move down into the secondary battle zone, now that momentum is a little bit too much to handle. The bears are going to try once, they'll try twice, and then I know exactly where those stops are. I just have to wait a little bit longer if I want to be a buyer after a big move down. Does that make sense? Now, most of the time, when these things fail and they run higher, you're also going to get a little two-try trap as well. Look for that trap pattern as it goes higher here. So two patterns looking for here if we can get that big pullback, right? That big pullback down into that, right, that battle zone. Again, it'll be a nested failure pattern followed by a two-try trap pattern. And again, as I mentioned earlier, I'm just simply marking up these charts. If you're with me tomorrow in the trade room, we'll do it together. If you're not joining me tomorrow, make sure you grab that free course. That way we can get the most out of working together every evening on this video. And again, all the links are in the description of this YouTube video. So now we know what we're looking like to buy low. What's the best way to buy high? Right now, this is where we really got to be disciplined because we're at all-time highs right now. And so head fakes are pretty common in all-time highs, right? Buying high is just not going to be a very reliable strategy right now. So what you want to do is you want to wait for a 1, 2, 3 breakout. Make sure you get a strong move up. Make those buyers actually prove it to us by holding that pullback. Once we get the 1, 2, 3 breakout, mark up the high, mark up that trend line, find your channel, and now we're buying the low of that hidden channel. Again, I call that a 1, 2, 3 breakout into a hidden channel pullback. The second pattern you want to look for is that two-try breakout. This requires a very aggressive move, strong move up, right? Got to be strong. You've got to get a real strong move higher here because what you want to do is you want to get it so strong that the buyers take profit. So anybody who's in the move, they go, shoot, man, that went up really far. Let's take some money off the table. So buyers take some cash off the table, but now what happens is sellers start to put their orders right about that high, right? Professional sellers will come in. They'll try to call that top, right? It's just like what happened back here. See that? That's all that is, right? Sellers are trying. They do this over and over again. When you see a strong move up, right? See that pattern? When you see a strong move up, what happens is the buyers take some profit off the table. The sellers will come in now. They'll drop their orders right above the highs here, and they'll wait for that up, and then, of course, right back down in again, right? So what I want to do is I want to let those sellers take a swing at this. And if they're successful, good for them, right? But if they're not, if we can hold off of that low, worst case scenario is a double bottom here. Best case scenario is a trap low. If I can get those bears trying once, bears trying twice, now all I need is that nice signal candle for that two-try breakout pattern, right? Again, you want that trap low ideally because you're going to be buying high, right? The nature of that pattern is buying high. Now, if we do get, right, this run higher, but we don't get that strong 1, 2, 3 breakout. We don't get that strong 2-try break. Remember, strength is so important going through these highs. If we get anything besides that, strong move up, pull back, a lower high, pull back, trap high, that's a gold, right? That's gold right there. A crown reversal pattern, right? Crown reversal pattern. Good example back here. 1 try up, pull back, lower high, right? Higher trap, right? Again, it's a crown reversal. This one didn't get very far, obviously, probably in the middle of the night. That's why. But the reality is, that's the same basic pattern there, right? Same basic pattern. So again, right, it's the 1, 2, 3 breakout, mark the channel, buy the low of that channel, right? It's that 2-try trap low, or it's up, pull back, lower high now, trap high, and back down. Again, that's called the crown reversal. Does that crown reversal make sense, right? Does that crown reversal make sense? Have you applied that crown reversal pattern to any other markets? Right? What other markets have you noticed those reversal patterns work on? I'd love to hear what you've applied this stuff to. Give me a comment in the comment section below if you've had success with this strategy on other markets that I'm talking about here tonight. So we know we've got that sell off the high. Now, what about the sell as we go lower? How do I sell as we go lower? Here's what you got to do. We got to go back into that range. 1, 2, 3, big strong move down. Find that low, mark that high. Same basic idea, right? I'm not trying to predict that pullback to keep going. You try to sell that pullback, same thing here, right? Same idea, right? Pull back, don't take the bait. Don't take the bait. This is not a trending environment. It's a range-bound market. So when I get that move back down again, I'm anticipating that the bears will try, fail, and we'll go back up into that range. If they can get lower, hold the pullback, and go, well, now we've got no choice. Now we know it's a bear market. I'm going to mark that low. I don't want to sell low down here, but I have to wait for proof. Once I see that proof, now I can mark up my lows, find my hidden channel high, and wait for my pullback. Those reversals, you got to stay patient because you don't want to be the one trying to pick tops and bottoms in an obvious, right, bull market right now. So a really good plan there on the S&P. And again, tomorrow morning, 8 o'clock Eastern time, we'll do it together. If you're not with me tomorrow, make sure you grab that free trading course right in the description of this video. Let's keep going. Over on the Nasdaq here right now. How's the Nasdaq looking here for us? Well, first of all, we know the market is bullish, right? We can easily see you got bullish momentum both into a trading range and just recently you'll notice, right, the market is quite bullish. So we can easily see right now momentum is bullish. Bull market tells me I want to buy pullbacks, right, to support levels. What else do we have here on the chart? You can also see we have that trading range. What does a range tell me? Range tells me buy low, sell high. Great example here of a strong move down into that secondary battle zone. So what happens? Strong move down. Do you want to buy it aggressively? No, you want to give it some time, right? Let them try once, let them try twice, and then back up into that trading range. You can see for yourself, right? The sellers, they put up a nasty fight right there. And you know why, right? Because of all that momentum. All of that momentum going lower, the bears were trying to knock this thing back down to retest those lows over here. So that's pretty obvious, that big strong move down. We also know that big strong move down, where do the buyers have to get to kind of negate that big move down? They've got to get above that high. So the buyers in the Nasdaq right now are inches away from really bouncing out any sellers who are trying to get this thing going down again. Now, again, I'm going to remind you, there's a lot of stuff that could happen overnight. There's a potential here as we go overnight to get some more headlines. So we could see in the shot moving lower. But I'll tell you right now, if we can get a move back above that 13 3/4 here, now all of a sudden I'm not worried about the elephant in the room, as I said earlier, right on the crude oil. So we know there is an elephant in the room right now, but that elephant's being worked into a corner right now, and of course might be kicked out of the room here soon. So we know we're bullish. We know we have a trading range. What else do we have here right now? Look at that pendulum swing. one of the things I always try to do is whenever I have a market that runs below the range and runs up, I always try to make the point of measuring the amount below the range, because that's going to be an easy level of resistance overhead. But most importantly, right, it'll be a nice juicy target if these buyers keep this going, right? So we know that pendulum swing provides a bull target overhead. We also know, of course, if I draw a trend line off of this high, bring it down to that low, boy, that's a nice looking hidden channel down there. And that might really put us in a spot here where we can get in that battle zone off the low of that channel. I would also be curious if we do pull back right now, where that kind of updated channel might be, right? So we'll keep an eye on that channel here overnight. And obviously we'll keep it updated with all of our clients tomorrow as well, but that will be some food for thought as well, right? Remember, I want to be buying underneath the range. So anything I can do to find levels of support down there, I'm definitely interested in. So as you can see, got quite a bit, right? Quite a bit of clues on this chart right now. As I zoom out a little bit more, I want to remind you too, we get that big measured move up around that 90.77, we'll call it, right? That comes off of these big move up before. Been kind of tracking those big measured moves all week here. So bottom line is there is no shortage of resistance overhead. The battle zone overhead is resistance. Pendulum swing is resistance. Measured move is obviously, right, resistance. I'm not sure if we're going to get that measured move, but I'll tell you right now, big news tomorrow morning. It wouldn't surprise me if the news comes out pretty bullish tomorrow morning and we end up around that 90, 76 area, 77 area by the end of the day tomorrow. I can't quite guarantee it yet because we don't know what the news looks like overnight or tomorrow morning at the opening bell, but I wouldn't be surprised if they do continue. They've been pretty darn bullish over the past 24 hours. So we know we're bullish. We know we're back in the range. I don't want to mess around in the middle of this trading range. So again, what I want to do is I want to see a pullback, right? I want to get down in this buy zone. Again, if we pull back right now, you know, think of it like that, kind of draw that channel out like that, right? So if we didn't go any higher here and we pulled back right now, I would adjust that channel. I'm going to wait for us to get underneath the trading range, try to get those sellers to try to take the bait and sell that pullback. It's not a bear market. It's not a trending market. It's a bullish range market. So sellers who are trying to sell that pullback right now, they're on the wrong side of the odds right now. We know their stops are sitting right above that high, and I can use that failure pattern. And again, I always like to look for that combination setup. So if we do get that price to pull back, moving average comes over, bears commit to the pullback, we look to buy into their stop losses, and then if we have enough space for it, you know, again, sometimes we don't get enough space. Sometimes that pullback pattern, sometimes the pullback happens inside the range, and we just simply don't want to trade inside that range, okay? So make sure you're getting in underneath that trading range. And again, if we make that next leg down, right? We now, again, if we collapse back down, we're not automatically bearish, but momentum will certainly be concerning. And so on that note, if we get down to that secondary buy zone now, anticipate, right? Bears are probably not going to give up without a fight. So instead of just a typical failure pattern, we'll add one more layer of confidence by looking for a nested failure pattern as well. And so we'll kind of play that by ear tomorrow, right? We'll wait and see, you know, how does the pullback? Is it a failure off that low? Is it a nested failure from the deep pullback? Wouldn't surprise me if we do see one more leg lower because of that big push down. But at the same time, though, what if we don't get the pullback? What if the market runs up, sits sideways here? We don't want to trade inside the trading range, obviously, but if we can end up back inside that range, not a lot changes. I'm looking to get underneath the range, looking for those sellers to commit off the moving average so we can buy into their stop losses. Or if they really tank, right, it's a nested failure as a small variation to it. It all has to do with momentum on that move going lower. Now, as we go higher here, all right, a little bit of broken record. I know this is the same thing we talk about on the S&P. As we go higher here, up into battle zone number one, how do we sell this thing? we sell it with a crown reversal. Now, this is a reversal pattern because you're going against the overall trend. So whenever we're trying to go against the trend, you've really got to be patient. These crown reversal patterns, they do oftentimes take a while, right? We go up, we pull back, we see a lower high, lower low, trap high, and then look out below, right? Back down again. Same pattern we saw here, right, is pretty much the pattern that you're looking for to sell overhead there. The only difference is that first example on the left-hand side, I wouldn't take the trade inside the range. You want to get above the top of that range. It's a good functional example though of what the structure of that pattern looks like. Just try to get it up inside that sell zone, right? Sell above the top of that trading range. But again, who knows? With big news tomorrow morning, how do we buy it as it's going higher? We can buy it as it goes higher if we can get a 1, 2, 3 breakout, mark the high, find that low, and buy that pullback. Ideally, you're going to want to get this before we get up into that pendulum swing. Or what I would rather get tomorrow is that strong move up, the profit taking for the first one, higher high, bears try to short it. I don't want to buy too high up here. I'm very bullish, obviously, at that point. I look for a trap. I'm concerned that pendulum swing up at 90-60 area there will act as resistance. My favorite pattern when I'm trying to avoid buying into resistance is a trap pattern. And again, you'll learn all about these patterns, right? Just dig into that description of this YouTube video or follow that link in the upper right-hand corner. Again, we'll do it together tomorrow in our trade room. If you're not with me in the trade room though, make sure you grab that free course linked up in the upper right-hand corner or in the description of that YouTube video. Now, we're looking good there. So we know how to sell it. We know how to buy it. We know we want to stay out of the middle. We're looking pretty good here, guys, on this Nasdaq. Let's wrap things up here now over on the gold, the yellow metal. Boy, the gold has really been consistent this week in the sense that it continues to be the most difficult chart of the video tonight. Gold, what do we know about gold right now? We know we're bearish. I think it's pretty easy to see that. We know the market is bearish as we go lower. What else do we know? We've got lower highs. We have higher lows. A flat moving average. What is that? It's a triangle. Triangles are just another way of a range. Okay, so triangles are ranges. The big difference, though, if you have a trading range, let's say, right? If I have a range, I use the size of that range to find the buy zones below and the sell zones above, right? But if I have a triangle, the one big difference about a triangle, we talk a lot about this in the free course, the one big difference about a triangle is you want to, again, stay out of the middle here, but you want to focus on the edges, right? The edges of these triangles, that's where the money is, okay? There'll be sellers waiting to sell high. There'll be buyers waiting to buy low. And really what you want to do is get up, sell it back down, get down, buy it back up. And of course, our breakout patterns, our 2-try breakouts and our 1, 2, 3 breakouts, right, will work as well. But again, it's a range. So when I find my range here, I mark up my highs, I mark up my lows. I want to get up, sell it back down, go down, buy it back up. So triangle is a range, tells us to buy low, sell high, avoid the middle. What else we got here? Hidden channel. Right? Hidden channel. Now again, anytime I find a range on the chart, I'm always looking for those trend lines above, those trend lines below. We don't really have a trend line below right now, but we get a beautiful trend line overhead. I've taken these lows, I've pasted them up at the highs. That equals a great, what I call a hidden channel, right? You're anticipating, you're using what we know as support to flip it around and find a level of resistance. And what this really does for me is it creates that trend line. Combine that right there. I mean, this is really kind of your sweet spot, right? Right up in there, the top of the triangle along with that resistance trend line. All right, what else do we have here? Got a measured move down here. It's a pretty big clue, right? Because the measured move, if we tumble going lower, right, that measured move's probably not going to be a great place to be a seller. And remember, we've been kind of tumbling lower here for the, well, keep it going, right? 1, 2, 3, 4. Now we talk about four legs a lot in my trade room, but we don't talk about them very much on this newsletter. And so I'll give you kind of an in-depth on this. Four legs down. Now, there's always an exception to every rule, but in most scenarios, when a market goes four legs down, that's about all it's going, right? Doesn't mean it's going to reverse. It does not mean a reversal, but it typically means that when we got four legs down, that's usually going to be a very hard bottom. It's usually pretty difficult for a market to go five legs down unless we get some news out of the Middle East, unless we hear about the Chinese trade deal, unless tomorrow's number comes out, so there's definitely some potential we might see this thing blow right to those lows. But again, pending any unforeseen news events that may shake this thing up right now, typically four legs down. I definitely don't want to be selling down there, that's for sure. And I can be a buyer off of that low, obviously. But as you can imagine, I've got to be patient with the right pattern. So now we know really kind of the nuts and bolts of this chart right now. Bear momentum says a sell at resistance. Triangle says sell above the highs. Hidden channel says, right, use that trend line. And measured move says, don't be afraid to try to pick that bottom with the right pattern, right? With the right pattern. So for example, if we go lower here and I want to be a buyer going back higher, what's the best pattern to be a buyer in a bear market? It'd be a crown reversal, right? It'd be that reversal pattern again. One of my favorite counter trend setups, right? And of course, we teach a lot more in our video course. But as we go lower here, right? Looking for the bears try once, bears try twice, trap low, and back up into that range. Again, remember, you're trying to go against the trend right now. We go down that measured move. The reason why that measured move is important is because I don't want to take a short as we go lower. Right? I don't want to get roped into taking that short trade. Okay, it's not going to be a very reliable trade. If they can keep it going, well then sure, right? But again, we don't have enough information yet for that. If they can push through it, then by all means we can do that. As we go lower though, if we get down to that measured move, right? How do we buy it? Crown reversal, 1, 2, trap, and go, right? We've talked about that quite a bit here tonight already. One thing you want to think about though is if we make a move lower and we start sitting down here. Okay, remember, if we sit and go sideways, now that basically confirms that this range up here has moved lower. So these are pretty much the only times where I'll now shift my focus to a new area. Make sense? We see this not all the time, but often enough where a market's range bound. We see for whatever, the market bleeds lower, this news that comes out, whatever it is, and they say, okay, we're good right here. This looks good, right? Put our feet up and hang out there. So that might happen. It's possible, right? Again, with major news here. Big run lower. Again, I'll look for that crown reversal to buy off that low, but if it just goes sideways here, right? Goes sideways, moving average flattens out on us, right? I'm going to mark up that range. And what do we do with the range? We buy low, we sell high. It's bearish that point now. I want to go up. What's my favorite pattern for a range? A breakout failure. Yep, a breakout pullback failure pattern. I call these two-try failures, right? Two-try failures. I wait for a bear market to get above the moving average. I wait for the buyers trying to buy the pullback, and we sell it back down again. Same idea, right? Same idea there. Two tries for the buyers, sell it above the top of that range. Now, what if we go higher here? If we go higher, we're trying to sell. It's already a bear market. So as we go higher here, I've got my idea of that trend line. I wait now for that moving average coming over, and this should be good enough for a failure into a pullback combination. The only thing you got to worry about again is just don't be too aggressive on that pullback if it's back down to no trade zone, right? If you're within striking distance, if you're down in this, let's say 51 to 48 area, if you're in the, kind of the thick of it right there, you want to stay away from that, right? You want to be selling overhead, let the market go higher, let the buyers try and fail and sell it back down in, or grab the pullback as it goes. A lot of traders, when they first begin with this stuff, they don't have the confidence to trade the pullback or the failure. So instead they wait for the failure and trade the pullback. It's fine. That's fine. Right? As you get more confidence, right, really it's the confidence in the range. I realize it can be scary when the market goes up like this to try to sell it. But you got to remember, it's a bear market. It's a range, right? There's a magnet right back in here. I realize that ranges are scary at first. So if you don't feel comfortable grabbing the failure pattern, okay, then wait for the move lower, grab the pullback as we go in, right? And again, I realize these can be scary, and that's why we do it together every morning in our trade room. Best way to learn this stuff is to come in and do it with me. That way you can do it as the markets are developing in real time. Looking good. So now we know the sell overhead. What if we blast? You right? What if we blast up overhead? If we get some news that comes out, we really take off to the upside. I'm still looking for a short, even if we go above these highs here, but that momentum will be a little bit too much to short right away. Wait for the 1, wait for the 2. Now, in this example, you're not going to need the crown reversal because the market's overall bearish. Remember, you only need the reversal pattern when you're actually trading a reversal. So what you would do is wait for the buyers once, twice. The key here is those lower lows. Right, that's the key, right? The lower lows. Get those buyers trying once. They'll want to try at a lower price. Once we get that second try, and we'll go over more details tomorrow in the trade room. I have all the rules for these strategies in a worksheet for all my clients tomorrow. So we'll go over those rules together tomorrow. But again, we don't need a crown reversal. If we get a crown reversal, great, right? If we do get that trap above that high, then wonderful. It's definitely better. But we don't need that. What we do want, though, is to get the buyers trying once, buyers trying twice, and then sell it back down again. And then obviously, right, this market has potential for a big short covering rally. We're almost 4 legs down right now. What would a short covering rally look like? How would you know it's coming? One would be a 1, 2, 3 reversal, basically, right? It's a strong move up. The moving average comes over. Now, again, we're looking for that failure to go right back down into that range. So don't be too aggressive trying to call that breakout. Make them hold it. And this is where you want to pay attention, how the market responds to that moving average. If the market jumps off the moving average, we are on to the upside. Mark the high, mark that high, find that hidden channel. That tells me now my sweet spot, and we're buying the pullback to the low of that hidden channel. What may happen, though, because of all the bears the last couple days, it may just go straight up like this, right? You might see it go whoop, whoop, right, and start taking off the upside. If it really just rips higher here, profit taking, higher high, sellers coming in, and we're buying here. And we get a lot of space overhead. So we don't need a trap low, but would be great to have one. Make sense? We're not worried about overhead resistance. I talked about this on the Nasdaq, right? The Nasdaq has that level overhead. So if we go higher here, you got to get the trap, right? On the Nasdaq example, the Nasdaq has that pendulum swing, right? Those levels overhead. So because of that, on the Nasdaq, you've got to get that trap low because traps are best when you're worried about buying into resistance. But there's nothing here until we get to that 1580 area. Right? There's nothing up there. So if we get that, again, the 1, 2, 3 breakout will be easiest, but if we get that strong move up here, 1 try for the bears, 2 try for the bears, at this point now, again, it's profit taking for the first one, it's sellers on the second one. Those stops are sitting right above those highs now, a nice strong signal candle, and we're literally buying right into those stop losses. You need those stops because those stops are gasoline on the fire. Think about it, right? If you're trying to buy up here, that is the definition of buying high, right? You're not going to make a lot of money in the long term if you keep buying high every time. So if you do get that strong move up, knowing we have potential here for that short covering rally, again, why? Because look left. Any time you see the previous day was this huge move, this thing could rip higher here. Easy. Once those bears go, shoot, we're done, get me out. Again, news comes out overnight, right? Everyone's scared again. The market takes off the upside. It's going to go so fast up here, you're not going to get a deep pullback. You want to wait for 1 try, profit taking. Higher high, 2 tries, trap. You're literally buying into those stops. And what I always tell my clients to do is take a 1-to-1 first target, get that stop up to your point of entry, and just let it rip. Just let it run, right? A lot of times these markets, they'll just keep grinding higher without a pullback. Because again, all the sellers who got short before, when they get spooked and they get out, what's going to happen? It's going to rifle and run higher, right? Again, it won't be buyers buying, it'll be sellers buying. And that's why it rips higher like that. It's very typical for a short covering rally. All right, guys? So got a good plan of attack here now for gold. I can't wait for tomorrow morning. Right? I think day traders are the only people who can't wait to get Monday morning, right? Can't wait to get back to work tomorrow. I'm excited for tomorrow's non-farm payrolls. Again, we'll be in our trade room at 8 o'clock Eastern time tomorrow. If you're not joining me tomorrow morning, make sure you grab that free trading course so you can follow along with us as we go. And as always, guys, don't forget, you can easily get registered. We'll be in our trade room tomorrow morning bright and early and every morning at 8 o'clock Eastern time. Come join us in the trade room every morning. That way you don't have to do this on your own. The advanced course includes all access to our trade room. You can learn more about that on our website. If you're on the YouTube channel, again, all the links in the description of the YouTube video. If you're on the blog right now at sidewaysmarkets.com, I'll put a big button below the video tonight on the trading blog. And I'll tell you right now, if you are still watching this video right now, I'm so happy to have you here with me this week. It's been a great first of the year. It's great to have so many committed traders here along with me. If you're still watching this video right now, do me a favor. Let me know you're still watching. Type 1% into the comment section here in the video. I want to see how many people are still watching this video, because the people who watch this from start to finish every night, I know you're dedicated. I know you're putting the time in, the sweat equity, as we say in our trade room. Hit that thumbs up button, right? 1%ers, let me know who you are here still in the comment section below. If not, I'll see you guys tomorrow morning, 8 o'clock Eastern time. If I don't see you guys tomorrow, though, make sure you come back and join us on our next edition of our nightly newsletter. Guys and gals, my name is Joseph. Thank you so much for being here this evening. Now get out of here, enjoy the rest of your evening, get some rest, get a big day for tomorrow. My name is Joseph. Be well out there, be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.